Hello, and greeting from Beijing. My name is Mushtaq Kapasi. I'm Chief Representative for Asia Pacific for ICMA, and I'm very happy to be here today with Rahul Ghosh, Global Head of Sustainable Finance for Moody's.
Great to be here, Mushtaq. Thanks for having me.
Welcome. So let's get right into it. Of course, you're a credit rating agency. You're involved in sustainable finance. So how do those two necessarily mix? And let me ask you a specific question. If I am trying to evaluate the credit quality of an issuer, what are the most important ESG, sustainable finance, transition finance related metrics that I should be looking out for?
It's a great question, and the reason this matters to us as a credit rating agency is because the shift to a low carbon, more resilient future will have transformative impact and potentially even a disruptive impact on certain sectors and certain regions. So just to put some numbers around that, we look at around 16 sectors globally with $5.2 trillion of Moody's rated debt that have elevated credit exposure to transition risks. So companies in those sectors, from oil and gas to steel, automotives to utilities, they're having to invest in making their operations and their supply chains more efficient. They're having to invest in unlocking new green revenue opportunities. This requires capex, that requires capital, and requires financing from the debt markets. So this whole story of sustainability is central to, I think, the financing piece of debt capital markets, and is why we play an active role in this space. In terms of metrics, I think, yes, carbon intensity and those sorts of metrics are important, but really getting into what are the policy metrics, the technology metrics that are really going to help you identify the winners and losers on this journey. I think that's what we really focus on as a credit rating agency.
Okay, so let's say I'm an investor. I'm looking at a company. I know they have an ESG, they have a transition policy, or they might not. They might have a net zero goal, for example. How can I tell when those are real, when they're actually going to improve the credit quality, and when it might be just statements in the sky? How can I tell the difference?
It's a great question, and something that we spend a lot of time thinking about, of course. So the first thing to say is that disclosure is improving, right? We're seeing more companies, more banks, more governments with net zero commitments or decarbonisation commitments and targets. I'd probably point to three ingredients of what I'd call a credible transition plan. So the first is, are you being transparent? And that sounds obvious, but we're really looking at, do you have not just a target way out in a number of decades, but do you have interim targets? Is your plan shareholder backed or board approved? Do you have clear dates and milestones around retirement of assets, for instance? Because that level of disclosure gives us confidence that your plan will be sticky through the business cycle and through the credit cycle. The second point that I'd mention is looking at return on investment. So we're in an era now where sustainable finance makes sense if it makes good economic sense. So the investments that you're making in decarbonising your operations or unlocking new opportunities, what is the return on investment? How are you quantifying that? And how are you articulating that proposition to your shareholders as well? And the third part would be scope 3. That's obviously the most challenging. It's your indirect emissions. How are you engaging with both upstream and downstream suppliers, for instance? Because that's where I think the rubber's going to hit the road on successful implementation of your plan.
And with one question, now that we're in Beijing, what are your impressions so far, or as of today, of the Chinese sustainable finance market, China's policy, and perhaps if you have seen any kind of lessons learned or any initiatives coming out of China that might be relevant for people around the world?
That's a great question. I mean, the first thing to say is China is now very much at the center of global sustainable finance. It's the second largest bond market for label bonds globally. And actually, if you look at the economy, the real economy rather than just finance, whether it's solar panels, whether it's batteries, whether it's turbines, China is clearly the mainstay of that electrification story in the global economy. Where I think China has shown a leadership is really about thinking through the lens of transition. The Asia-Pacific challenge is very different to the challenge in Europe, where I sit. You have young carbon assets with quite a bit of economic life. You still have a lot of inherent power demand coming from electrification. And so it's important that we don't just take a purist view. We have to think about how do we transition from brown to less brown and hopefully like green. And that's where I think that focus on transition here is starting to now have global resonance. Of course, you need to be credible with that, and standards like ICMA's new transition guidelines, I think, are going to be really important in connecting what you're financing at the asset level to your overarching story as well.
Well, thank you very much. I hope so. Really appreciate your time, Rahul.
Thank you.
Hope you enjoy the conference.